Hey everybody, Brian Shannon here from alphatrends.net. It's Friday the 22nd of November, and I hope you had a good week. It certainly was for the markets, in particular crypto. Bitcoin got very close to, but not quite at that 100,000 level. So let's take a look at these charts and make some sense of it. Let's start first with this look, because this shows us where we are in relation to the 5-day moving average, as well as the anchor since the election. The anchor, of course, is from the election is that orange line there, and you can see the S&P 500 higher high above a rising 5-day moving average with a rising and also above the anchor from the election. So that's good. The Nasdaq hasn't made really the higher high yet, and it's trapped so far underneath the anchor from the election. You can see how clearly important that anchor was, first off as support a couple times over here a couple weeks ago, and now as resistance this week. Semiconductors are a little bit weaker simply because the semiconductors have been an underperformer. They're starting to neutralize here, but I think for the buyers to really regain control, they need that 248 level above the anchor from the election, and the Russell 2000 is kind of leading here a little bit. So let's take a look at these charts here. And we'll look at, let's go back actually, before I forget, because I always do, let's take a look at the charts of Bitcoin. As I didn't really talk much about it this week because there's nothing to talk about. It's just making higher highs and higher lows as it's supposed to, and it's coming right up to the level it was supposed to go to, which is 100,000. So if you're nervous about it, take some profits off, raise your stops, do what you feel is right for you. I'm continuing to hold my 20% position. As I mentioned last week, I added some Ethereum down in here. It really didn't do much till yesterday. So Ethereum looks like maybe it's going to do a little bit of outperformance here, hopefully, and catch up to the performance of the Bitcoin. But, congratulations to the hodlers, because clearly that has been the correct strategy for Bitcoin over the long term. The S&P 500 found buyers exactly where it was supposed to, and you can look at it, and it's so clear in hindsight that resistance broke and held as support right at that 20-day moving average. And we spoke about that, but I wasn't ready to become bullish because we had this big choppy mess in here. And this is a choppy mess. To hold it here and have it gap down 4 or 5 points, to me, that's not good risk management. And then have that big rally, a decline, and then all of this nonsense in here as well. So you've got to look at your time frame and what makes sense for you. Next week, I'd like to see that if we pull back, we maybe pull back down to the 5-day moving average and then really firmly hold above the anchor from the election. If we can see that hold as support, get tested and hold as support, then I think that will allow this market to be able to continue to move higher. And next week, we have a holiday shortened week and traditionally a bullish week. Seasonality, as I like to say, is a time of interest, just like price action, in moving averages and the anchor, and that is a level of interest. The Nasdaq, as we mentioned, it's stuck right here at that anchor from the election. The 5-day moving average is rising, so that's a positive. Maybe we get a little bit of a pullback in here to create another higher low and then get going. Similar to the action we saw in Tesla this week. That Tesla, we had that gap up on Monday, then a lot of back and forth action. We saw these higher lows indicating that the buyers were becoming more aggressive in terms of not waiting for a pullback down to 330 before they took control, but instead taking control at 330, whatever this is, 334, then taking control at 345, and then taking control at 337 with these higher lows. Today, we finally got the push higher. As I mentioned to Alpha Trend subscribers, I decided to take a third off. I usually do it near daily R2, but what I did was I used the 5-minute exit, meaning that for each 5-minute bar, as it makes a new high, as long as it's making a new higher low rather, then I'm going to stick with it until right here at this point. That's exactly where I took a third off. Basically the same price as daily R2, but a strategy nonetheless to reduce exposure a little bit. And I do that because I'm a swing trader, and now I have reduced my risk and I'm holding a 2/3 position. That's the way I do it. I don't tell anyone what to do, but I show you the reasons why I take these actions, and that's what I have been doing for Twitter subscribers as well for just $10 a month. Anyways, the Russell 2000, picture perfect, resistance broken tends to act as support, and it did so perfectly in here, right at that rising 20-day moving average as well. It ramped right up through that anchor from the election. I was thinking yesterday, this is a sketch I drew in yesterday afternoon, I was hoping it could pull back a little bit. I didn't get short in here, of course, and I'm not long the Russell 2000 either, but I am long a lot of individual stocks. If you look at the market, the market really made it easy this week. This is something I had posted on Twitter, that these stocks, I think I posted this on Tuesday evening, that these were some stocks that looked good, that even though I was a little bit cautious on the market, my goal was to trade each stock based on its own merits, and that there were a lot of individual stocks set up. Every single one of these 12 stocks is higher than where it was on here, and many of them significantly higher. To me, that says I'm not smart. It means we're in a good stock trading environment, and a lot of those stocks are the types of stocks in the Russell 2000. So I don't have to own the IWM to be able to participate in low risk, high probability setups, such as, again, Tesla was one of them. GTLB at $60 per share, ADTN at $7.92 up to $8.62, Bill at $86.09 up 5 points, EXFY. So again, there's a lot of opportunity. EXFY at $277. That's a huge percentage move. So there were all kinds of price ranges in there. It's not just about penny stocks, and it's about stocks where there's low risk, high probability setups, and that's how you can participate in this. While there might be uncertainty on the overall index, there's still a lot of individual trade setups, and that's what I do for subscribers every single day. Next week, I'd love to see this Russell 2000 pull back down towards this level, see the 5-day moving average catch up to it, see it hold on the anchor from the election, and then go break out and continue to move higher. That would be the low risk way that I might decide to get involved in the IWM. If that doesn't happen, I really don't care. I don't need to trade the Russell 2000. I've got a lot of individual stocks that are working. I don't need to trade the semiconductors to make money. And the semiconductors, this is what I drew in last night. I was hoping maybe it can pull back from this anchor from the election and the month to date. And this time it did do that. It doesn't mean it was laid out as a blueprint just because it followed it precisely so far. But this is what I'd like to see next week. I don't even have to redraw it in. I'd like to see it rally up towards this anchor from the election, maybe find a little bit of supply there, pull back, make a higher low, and then get going. We have, though, for those semiconductors, these stocks are still up close to 40% year to date. Still a fantastic year. They're allowed to rest. They're allowed to breathe before they lead again. But we've got the 20-day moving average declining. We've got the 50-day moving average up in here as well. So there's no reason to be super excited about them, especially when NVIDIA is just kind of back and forth, a lot of uncertainty here. It broke to a new all-time high and then pulled back in pretty aggressively. Not horribly, but I wouldn't be surprised at all. That's what these arrows are, to see it come down and test the anchor from this October low. It did so here, and then here. So why wouldn't it come back down there again? Maybe even down to the 50-day moving average in this level. NVIDIA rather, to me is just best left alone unless you're a day trader. If you're a day trader, well then you're going to go in here on these shorter term time frames and find the opportunities in there. That's not what I do. I don't qualify myself as a day trader. Speaking of big movers this week, MSTR. This one was kind of, if you look at these stocks, and if you're just saying, hey, I want to buy the dip, where do you buy the dip to? Well, the anchor from the election here as well, it didn't touch it perfect. It didn't hold perfectly, but it came down to that level yesterday. And where did it come up to and find supply today? Right at the anchor from the high. So there is order and structure that the institutions provide us basically to look at these levels and say, where does this stock have the potential to go after bouncing from there? Right up to where it was supposed to. And this is something I outlined yesterday also on the Twitter subscription and Alpha Trends. So, there's a lot of opportunity in there, but it doesn't mean it's an easy move. Today, it was just a beautiful series, though, of higher highs and higher lows here on this shorter term time frame. Just beautiful pattern in there until we saw a little bit of a shakeout here and then recovery with higher highs and higher lows again. Didn't hit the high of the day, but the point is there is order and logic to way all these stocks trade. The biotechs are recovering here. I'm not long these. Again, I don't need to be long them to make money in the market. As I've been mentioning, though, if you are long, it's making a beautiful pattern right now of higher highs and higher lows. But it's below a declining 20 and 50-day moving average. It's below the anchors from those prior peaks. Be aware of the anchor off of the high that it made this year. That is now going to be this red one. And what we'd like to see is that if this group is actually going to fully recover, which I have my doubts because we're below this prior band of support in here, we're below a declining 20 and 50-day moving average, and we still have the anchor from the election as well. But if it's going to recover, it's going to need, I think, to pull back down, maybe do something like this, and then perhaps in the next couple of weeks, be able to come back up and test this level, make a couple stabs at it before it's able to go higher again. I could be absolutely wrong about that. And again, I don't care. I don't have to trade the biotechs. There are so many things to trade out there, individual stock-wise. You look at places to avoid. Avoid Google. It's breaking down. It made a pattern here. It made this lower high, and then it made a lower low. Now it's at the 200-day moving average. It's at the just above the year-to-date anchor. Maybe it's going to continue down towards that level. If you look at the longer-term chart, we're riding this trend line here in Google that, who knows, maybe it's going to test that, make a lower high, and break down. I'm not calling for that to happen, just as I wasn't calling for a top for the Nasdaq last week. It still may end up topping here, but it doesn't pay to be always looking for a top. You have to look at it and say, here's the potential scenario. But if it can hold here and then break through this level, I'm going to continue to give the benefit of the doubt to this trend. This is the most powerful trend out there, and we want trend alignment. Of course, we're going to get a little bit more cautious, a lot more cautious when we're below that declining 5-day moving average. It would be foolish to not be cautious below that declining 5-day moving average. So it's all about time frame. I'm a swing trader. That's what I talk about. Everything that I mention on here, if you're an investor, you've really got no business listening to me. Maybe to help time you into shorter term trades, but I'm not an investor, so I don't talk about investments. I talk about swing trades as it fits in with the longer term time frame, such as the financial stocks, another new all-time high here. Energy names continue to outperform. They broke that resistance. I don't trade energy names, but if you trade them, they're making a beautiful pattern of higher highs and higher lows. Know what your time frame is. And I wanted to tell you quickly also about that sale that's going on for alphatrends.net. It's good through the end of the month, and what you get each day, at the end of the day, I do this video, basically a 3 to 5 minute video talking about the major ETFs like you see on here. I go in the same detail and do, as I said, these types of drawings and say, here's what it looks like is most likely. So I talk about that every single day at the end of the day. After that, I go through another video, which is about probably no more than 10 minutes. It's highly educational, and I talk about individual stocks and provide suggestions, such as buying Affirm this week at $58.60 per share, and then taking partial profits off. We still have a 2/3 position here with 2 stops left in there, also in Bros. So I go through these setups, update the stocks and stops rather, and then a midday video where I very quickly talk about the indexes and then update these positions. Also, every other Monday, we have a live webinar, which is educational, that is have all your questions answered. We've got a 30-minute one-on-one with me. We've got I think it's about a 10-hour course, and that is all included for 1 year for just $998. So be sure to check out alphatrends.net, and thanks for your time. Have a good weekend.